Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. Global equity markets surged to new heights this week, propelled by the U.S. Federal Reserve's decision to cut interest rates for the first time in over 4 years. Investors welcomed the larger-than-expected 50 basis point reduction, fueling optimism across major indices. In the U.S., all 3 major indexes reached record levels. The Dow Jones Industrial Average rose 1.6%. The S&P 500 gained 1.4%. The Nasdaq Composite added 1.5%. Smaller cap stocks outperformed, with the Russell 2000 index advancing 2.1%. European markets had a mixed performance. The Stoxx Europe 600 index dipped 0.3%. France edged up 0.5%. Germany saw a modest gain of 0.1%, Italy increased by 0.6%, and the UK's FTSE 100 slipped 0.5%. In Japan, the markets rallied. The Nikkei 225 surged 3.1%. The broader Topix Index rose 2.8%. Despite disappointing economic data, Chinese equities rose. The Shanghai Composite Index gained 1.2%. The CSI 300 added 1.3%, and Hong Kong's Hang Seng Index jumped 5.1%. The yen weakened by 1.47% as safe haven demand diminished and the US dollar strengthened on rate cut optimism. The GBP USD rose 0.54% to 1.33. The Euro USD edged up 0.29% to 1.12. Oil prices also rebounded this week, climbing 1.7% to 72.92 USD per barrel. The rise was supported by the Fed's rate cuts, which bolstered market sentiment and geopolitical tensions in the Middle East. Gold continued its upward momentum this week, rising by 2.05%. The week's highlight was the Federal Reserve's decision to cut interest rates by 50 basis points, a move larger than many had anticipated. This marked the first rate reduction since March 2020 and signaled the beginning of what investors hope will be a sustained easing cycle. Initially, markets reacted cautiously, but optimism surged later in the week, pushing major indexes to new records. Retail sales slightly underperformed, growing less than anticipated, hinting at a potential slowdown in consumer spending. The ZEW Economic Sentiment Index showed signs of further weakening, indicating continued pessimism among analysts regarding the outlook for the Eurozone's largest economy. French inflation remained elevated, driven largely by service sector costs. However, the overall sentiment in France's financial markets was more upbeat compared to other major European economies. The Bank of England held rates at 5% as expected, but voiced concerns over rising services inflation. The Bank of Japan held its key interest rates steady, maintaining its ultra-loose monetary policy. Despite growing inflationary pressures, the BOJ reiterated its focus on economic recovery and signaled no immediate changes to its policy stance. BOJ Governor Kazuo Ueda highlighted that any future hikes would depend on sustained inflation above 2%. Japan's core CPI for August rose 2.8% year-on-year, in line with expectations and slightly up from July's 2.7%. This marks continued inflationary pressures, though the broader economic recovery is tempered by weaker consumer spending. China's latest industrial production figures for August showed growth of 4.5% year-on-year, down from the previous month's 5.1%. The property sector remained a critical point of concern, with property investment falling 10.2% year-on-year. New home prices in 70 major cities declined for the 14th consecutive month, underscoring the sector's prolonged downturn. China's urban unemployment rate rose slightly to 5.3%, its highest level in 6 months. Here is what to keep an eye on this week. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.